The loan amount should be paid back with interest, but the interest rates required by the insurance company would typically be much lower than the interest rates required by bank loans or credit cards. Unpaid loans will reduce the death benefit by the outstanding amount. Cash withdrawals are also considered an option to access the built-up cash value of the whole life insurance policy, but are limited to the amount specified in the terms of the insurance policy. When exceeding the set amount, these cash withdrawals may end up reducing the death benefit that is received by the policy beneficiaries. So, let's illustrate what we learned here through a simple example, shall we? Let's say Nick is 40 years old and wanted to purchase a whole life insurance with a death benefit of $500,000. On average, Nick will be paying about $430 per month for whole life insurance premiums, which results in $5,160 per year. Nick will only be receiving dividends on the portion of the $5,160 that went into funding the investment component, which is the cash value of the policy. This will result in 2.2% dividends, as reported by the Consumer Reports Organization. This means Nick will end up with dividends of a bit more than $100 per year. So, after running some numbers, you can quickly see at this point that this is not the most appealing type of investment when compared to other options that may yield a higher return on investment. Nonetheless, whole life insurance is highly recommended by many brokers and financial advisors across the US as the best possible investment tool. The reason? One simple word: commission. These advisors receive commissions between 80 to 100% of the annual premium paid by the policyholder. This is a high commission since whole life insurance has an investment component and requires rather high premium payments when compared to other life insurance options. So in this case, Nick's advisor could receive up to $5,160. But don't get us wrong, there are situations that whole life insurance may be an amazing option. This includes families that have an ongoing financial need, having a child with special needs who requires